So I'll call the meeting to order. We have a quorum, right?
Yes.
Okay. So I'll call to order, and Ann, do you want to do a roll call?
Sure. Member alternate Bellman?
Present.
Member Sue, I'm here. Member Jordan?
Present.
Member Weitzel is absent. And Chair Rowden.
Here. All right, so item 2 is the consent calendar.
Oh, wait, we got to read the land acknowledgement.
It's even written on the thing. All right, so the City of Albany recognizes that we occupy the land originally protected by the Confederate villages of Jean. We acknowledge the genocide that took place on these lands and must make strides to repay the moral debt that is owed to this indigenous people, specifically the Ohlone tribe. We thank them for their contributions, which have transformed our community and will continue to bring forth growth and unity. The City of Albany commits to sustaining ongoing relationships with the tribe and together build a future, a better future for all that now make this their home. Now we can move on to the consent calendar. Does anyone have any questions or want to pull any items?
Yes, I would like to pull the minutes since I wasn't here. Be a little presumptuous of me to pass judgment on the minutes.
Okay. And it looks like John Weitzel is in as an attendee. I was going to ask if any attendees wanted to pull anything.
Pull him up. Yeah, he's coming. He's rejoining. Should be rejoining. So, okay, John, you're a part of the panelist now.
Okay, so Preston would like to pull 2-5. Does anyone else want to pull anything else? All righty. So
With
2-5, you just want to pull it.
yeah, with that I can move the rest of the consent calendar, the other items.
Okay, moved. Somebody want a second?
I'll second.
All right.
So, member alternate Bellman?
Yes.
And I vote yes. Member Jordan?
Yes.
Member Weitzel?
Yes.
Chair Rowden?
Yes.
So all pass except for the minutes. And does someone want to move the minutes? Or I can move the minute. I'll move the minutes. Someone would like to second?
I'll second.
Thank you. Member alternate Bellman?
Yes.
And I vote yes. Member Jordan?
Abstain.
Member Weitzel?
Yes.
Chair Rowden?
Yes.
Okay, passes.
All right, so that covers the consent calendar. Next is public comments, but we don't have any public comments, or well, we don't have any public to comment. And 4 is announcements. Does anyone have any announcements? Perfect. Number 5 is reports. So Dewey, I will let you take the stage.
Thank you for your time, everyone. And apologies, I should have let you know. And I wanted to bring our colleague, or my colleague Jack Caldwell, on the Zoom too. Unfortunately, I missed the last meeting, so I just wanted to bring him on. So you have some familiar faces. Just in the event that I couldn't join the meeting, there's someone from CIBC who could present to the board for future reference. So let me share my screen real quick. And can everyone see it all right?
Yes.
Okay. So similar, this is a year-end review of the portfolio for the year 2021, similar to the previous review we've done. This is a quarterly and performance at the end of the year as well, for the year 2021 as well. At the end of the year 2021, the portfolio of that we manage this is the asset allocation. So there are about $305,000 in cash, about $1.4 million in bonds, and about $1.87 million in stock funds. The ending balance of the portfolio was $3,576,000 at the end of the year. This, just to reiterate, this portfolio is invested in a more balanced strategy with a target of 50% equity, 50% bonds. Over the last few years, we have, due to the rate environment, we have maintained a higher equity weighting, comparing to where the target is, and we have been running more 60-40 type of portfolio. The reason for the cash was that was reserved for distribution earlier in that year. We were planning to put more into bonds when rates started to move up, but it wasn't where we wanted it yet. So the cash was more opportunistic to wait for a better opportunity to add to bonds. This is the change in value of the portfolio in 2021. Started the year with about $3.4 million. Withdrawal, and this was the first quarter withdrawal, $300,000. Since then, the board has not withdrawn from this account this year or 2021. The income was interest and dividend that was received in the portfolio, $64,600. And capital appreciation was the gains from the fund, so $405,000. Total income and capital appreciation is the total return, $470,000, and the balance at the end of the year. This is a cash flow, or the value of the portfolio, the change in value since inception. The portfolio was started managing this portfolio since September 2009. Started with $10.9 million. The net withdrawals from the portfolio was close to $14 million. This is the income and capital gains from the portfolio. As you can see, the income and capital appreciation distribution historically, over the long time horizon, income for a balanced portfolio, income and capital appreciation was more on par to each other for a balanced portfolio. Over the last 12 years, you can see due to the rate environment, income was significantly less. But because of that, capital appreciation was more, and that was also the reason why we over the last 12 years, we have been slightly overweight equity for the portfolio. So same thing, value at the end of the year, $3.57 million. And this is the performance last year in this portfolio. If you just look at last year comparing to the previous 3 years, last year was a very successful year for the pension portfolio. Ended the year close to 15%, comparing to slightly over 12% over the previous 3 years. And this was mainly because of the selection of funds that the pension had. This is the Dodge and Cox Fund, and we talked about it in the last several years. If you look historically, since inception in the last 3 years, when you look at the performance data, when we compare against the value index and comparing against the S&P, This fund is more in between the S&P and the Russell 1000 value. So there's a little bit of growth in there, and there's a little bit of value. So in a growth environment, the fund underperformed against the S&P 500 last year. There was a big, value versus growth rotation. So more money went into value, and as subsequently the fund did very well in that environment. So the stock fund was up 31.69% last year. The bond funds was down close to 1% for the year, and that was because the rising rate environment that we were in. So the prices of the bonds went down as rate went up. That was also the reason why we held off on putting the cash to work in the bond funds. We think that there'll be some adjustment over the coming quarters. So there will be better opportunity once we add the money to work. I just wanted to make sure too, before we put the money to work, Heather, you don't anticipate to make any withdrawal over the next few quarters, correct?
I do have to look into that. We may need to make one or have one approved towards the end of this fiscal year. So okay. When is our meeting? So it's January, April. So potentially we'd need to approve one in April, or the next one's July, right? So we potentially, I have to look at the cash that we have.
Okay.
Aside, though, we do have some other cash, and the city is making a $500,000 contribution to the pension fund this year. Okay. So long story short, I have to do an analysis.
Okay. So, over the next few quarters, or at least the next quarter or two, we will, I'll let you know if I'll check in with you if we make a decision to invest the cash or sit in cash for the time being, before I make the trade. But so that's the performance overall last year. Any questions so far?
Yeah, I have a couple of questions. Is the newbie here? I'm familiar with Dodge and Cox, but I don't know if it's familiar with this specific fund. It tends to actively managed. I don't know if this fund is actively managed.
It is an actively managed fund, yes.
Okay. And is the returns that are being shown after payment of fees, if there's fees, or?
So this is a mutual fund, so it's net of fee of the mutual fund fee. CIBC, as an advisor, we do charge separate fees, and it's not charged to the portfolio. The city pays a separate
consulting fee.
Yeah. I was speaking specifically to the mutual fund fees, whether they were in or out. If they exist, presumably they exist as an actively managed fund, separate from CIBC's management. Thanks.
Yeah. Okay, so this is the part where we go over our CIBC market outlook. Before we go over the outlook, this is a look back of where we were in 2021. As you could see, the 12-week 1-year performance, U.S. stock outperformed the rest of the global market. International market did relatively well historically, but comparing to the U.S., been there's a significant difference. We don't have specific international allocation in this pension portfolio. We used to, but when we raise cash to make distribution for the previous year due to the performance of international and the risk inherent with international investment, we decided to exit international equity first. So right now we don't have any international exposure in the portfolio. In the bonds return, you could see long-term bonds was down last year. Intermediate bonds were slightly down. The bonds fund that we invested were more intermediate to short term. So as you can see, that's the return, why the return is slightly better than the intermediate bond return. We do not own any high yield in the portfolio for the pension. High yield, to us, when we invest in fixed income for a pension fund, we want to go with the highest credit quality. So we try to look for investment grade bond funds rather than corporate high yield. So corporate high yields did well last year overall, but that's based on the environment that we were in, where there were a lot of excess cash in the system. Last year was capped, as you can probably see it with a lot of headlines on high inflation, and it show in the number in the performance of commodities. So commodity index was up 27%, oil went up 65%. This is more of a comparing against a very depressed number at the end of 2020. So you see this kind of return. We don't expect this type of return to continue this year, although we do think oil continued to go up, but not at the same rate that you saw last year. Gold was down 4% for the year. So in terms of outlook, the investment team going into this quarter or going into this year 2022, we in summary, we think that overall the economy, the U.S. economy, will continue to have solid growth as a whole. Although the outlook or near-term outlook might be clouded because of the COVID surge, and there are a lot of geopolitical headlines that could change the near-term outlook. The main thing for going into this year that we look at, or the market is looking at, is inflation. Starting in the middle of last year, there were concern about inflation running high, and toward the end of the year it was the conversation was more about how high can it be, and how long can it last. And it shows that it has persisted for a while. We do think that inflation will remain high. We do expect it to moderate slightly, just because a few quarters ago we talked about the Fed thinks inflation, or thought inflation was more transitory, and it was linked to shutdown. It was linked to supply chains disruption. That as we expect that to work itself out this year, we do expect inflation to moderate slightly, although it will remain high. And with that, the Fed is committed to fight inflation by they expected to raise interest rate. So the Fed has announced that they would stop the quantitative easing and started tapering program. We expect them to finish tapering in the first quarter and start raising interest rate. So what does it mean for the stock market? Well, in terms of raising interest rate, we know what it means for the bonds market. We expect a rate to rise. So long-term bonds prices may be under pressure, but over the long period, it's present better opportunity to invest in bonds with higher rates. For equity markets, it's kind of happened last quarter toward the end of the year, where we saw growth stock sold off more comparing to value stock, and that was the result of investor were doing reevaluate their portfolio, expecting interest rate to go up and sell high growth stocks. So we do think that that will persist this year. But overall, for the stock market, historically, it's shown in a rising rate environment, or when the Fed started to raise rate, over the coming 12 to 18 months, the stock market return has been in the double digits. So historically, in a rising rate environment, stock market performed relatively well. It doesn't necessarily mean that when the Fed decided to raise interest rate that the market will rally. Short term, it's more on investor sentiment, but longer term, 6 months, 12 months, 18 months out, it seems to be benefiting the equity market. I touch up a little bit on the U.S. economy. Our view is there's positive. The U.S. economy, the growth in U.S. economy is positive. The outlook, near-term outlook, is more mixed because of geopolitical headlines, and right now with inflation data and headlines. But where we see the tailwind is over the last year or so, the household wealth has gone up significantly. Unemployment rate has dropped to a normal number that it should sustain, could be very positive for the economy going forward. We do expect real economic growth to exceed 5%. So with that, we think that near term, with the concern about COVID, concern about headlines, could be the outlook for the economy is more mixed. But longer term, for the year, we think the tailwind would win out and would help the economy would perform better over the 12 months period. Inflation, I touched a little bit as well earlier. Inflation, we expect to moderate comparing to where it was last quarter in December, but it's still going to be higher comparing to the Fed's target of 2% historically. Likely, when the Fed start raising interest rate, the target for the Fed will be likely in the 3 to 4%. And I also talked about global supply chain. There are data that shows that supply chains is easing. The chip shortage is actually reduced in terms of the shortage right now. The day that chips are coming to the market. Also, shipping costs has come down. So there are signs of supply chain disruption, or it's going back to normal. It's not there yet, but that's the trend is positive for the overall global economy. I'm going to skip the next few slides, but talking about U.S. equity, the outlook for U.S. equity, as I mentioned, we do think that over the 12-month periods, U.S. equity would be slightly positive. We expected earlier going into this year that stock would be more volatile, and it's actually play out over the last few weeks that we saw that the market has been very volatile. But to put in perspective, if you just looked at independently the last 2 weeks, the stock market was very volatile by itself. But if you put in the context of last year when the S&P went up 28%, when we had growth comparing to 2020 significantly higher, it's a lot of valuation readjustment. Certainly earnings went up, but it wasn't up in the same growth that the price of equity has gone up. So it's more of a valuation adjustment, and a lot of, we had quite a bit of excess in, you could say, some bubble in certain sector of the market that was working itself out. So just look at the 2 weeks period, the past 2 weeks, it was more volatile comparing to the previous year and a half that we had. but it's not out of the ordinary. And if in the context of 18 months period, it has been more of a normal market condition. And we expect for this year, 2022, corporate earnings outlook will continue to be positive. We expect high earnings growth, earnings growth to be in the high single digits, and that would translate into a positive year for 2022. I talked about a little bit of the excess. Well, going into this year, we said, the speculative excess need to be monitored. Well, a lot of it, kind of work itself through the last few weeks early in the year. So it's a healthy sign for the market. So, toward the end of the year, we were worried that a bubble was forming, and, it didn't get to be big enough to cause a systemic risk. And so it feels like it's a healthy market condition that some of this speculative excess were being sold off. So overall, basically, this is our current view for the asset class. We have for global equities, we have a neutral views. Basically, it's the same as the previous quarter. Neutral just mean if we are at allocation, or we have an allocation target, we stay at that allocation target. We don't want to go too much over, or we don't necessarily want to be too much under. Fixed income, again, we have an underweight. We do think that interest rate will continue to go up. So, we don't necessarily want to be, over the target for fixed income at all. And the other part that we still maintain our positive view is MLPs and master limited partnerships, real estate, and some alternatives. We don't own these asset classes in the portfolio, but basically it's just for the total market view where we see opportunity versus where things are. And that concludes my summary. Any questions, concern?
And for me, I do know you. I don't know if this was written before the recent. I guess it's maybe not technically a correction, but seem to be approaching a correction, at least with S&P 500.
It's crossed the correction territory earlier today. Then it bounced right back. Again, I think you weren't here when we discussed, like market outlook. I always try to remind the board that in any given year, historically, we tend to have at least one correction. We just haven't had it since October or September of 2020. Mm-hmm. And last year was more of a 5% sell off, then it rallied. 5% sell off, then it rallied. There were a lot of movement in the market between value stock and growth stock, but overall, as the S&P 500 as a benchmark, there were not a lot of movement. If you just look at the totality of the market, right now we just experience what we normally experience in the past, and it's more a healthy sign of the market not being in an excess area.
Yeah, to be clear, I wasn't noting that to signify any kind of alarm. I appreciate your calm hand on the tiller.
All right. If there's no other questions, thank you very much for your time, and we look forward to seeing you next quarter.
Thank you.
Nice meeting everyone.
Thank you.
All right, so that was item 5. Thank you again. And so item 6 is, or 6-1 is organization of officers. I'll elect a chairperson and a secretary to the pension board. We do this once a year. Previously, it was Kim was the chairperson for quite some time, correct, Anne? And then Anne is the secretary. So currently I'm the chairperson and Anne is the secretary. Does anyone want to make a motion?
Well, I don't know if this is out of order, but I would nominate the current chair and secretary to continue as the chair and secretary, should they be willing to accept the nomination.
Sure.
Yeah.
Unless one of you want to step up and.
Anybody else want to do the agendas? Hold on.
I'm sorry, who seconded?
John.
Okay. So member alternate Bowman,
That was a yes, although he was muted. I saw his lips move. I'm not great at reading lips, but
I'm sorry.
Yes.
I'm sorry, I have my head down, so I didn't know you already said it. And I vote yes. Member Jordan,
yes.
member Weitzel,
Yes, thank you guys for doing that.
and Chair Rowden.
Yes.
So it passes. So we'll continue. Heather.
As is. All
Thank you.
right. The next item is item 7, future agenda items. Does anyone have any future agenda items? Perfect. The next meeting is on April 26th at 3. And after that, that's it.
Very good. Thank you, everyone.
Thanks, everybody.